This week, the Australian dollar traded from around 74.25 down to around 73.25. The boost earlier in the week from centrist Macron's win in the French presidential election faded quickly. Domestically, one of the key areas of focus was the Australian budget. The 2017-18 budget focused on infrastructure, education and healthcare. Importantly for markets, the government sees a surplus attained in 2020-21. This is key to Australia's AAA credit rating. While Moody's and Fitch came out with positive commentary, concerns are focused around S&P, which put Australia on negative outlook last year. Commentary last year suggested that the S&P was watching this update for a credible path to a surplus. The revenue and savings measures announced should address some of these concerns, but the key question is whether S&P sees the government's forecasts, such as for growth and iron ore prices, as credible. Also in Australia, we had the March retail sales update. This came in at a disappointing 0.1% fall compared to a small rise expected. The details showed that much of this was due to wet weather conditions and Cyclone Debbie. In Queensland, retail sales showed a fall of 1.3%. While we expect a bounce back next month, this release highlights the downside risks of consumption in the first quarter national accounts. Internationally, headlines were dominated by US President Trump's abrupt firing of FBI Director Comey. The timing saw media and some politicians draw comparison to Watergate. The attention to questions around Trump's administration's connections with Russia distracted from policy and could reduce Trump's political capital and any support he has in Congress. This could make an overhaul of healthcare, taxes, and crafting a budget for the next fiscal year difficult, especially given the divides in the Republican Party. Short term, we see this as potentially weighing on the US dollar. The further out, we see the Fed's path of gradually raising rates as supporting the US dollar. Markets are currently pricing in an 85% probability of a hike in June. The Australian dollar, however, is unlikely to benefit from any US dollar softness. Iron ore has fallen 12% over the past 2 weeks to around $60. Concerns around China as well also weigh. The Shanghai Composite is at 7-month lows, and there remain concerns around the high levels of debt in China and the measures taken to reduce this debt. On the positive side, the RBA is optimistic and rates should remain on hold. Next week, we'll see the RBA meeting minutes. We also have consumer sentiment as well as home loans data. On Thursday, we'll have an update on employment. We're expecting a gain of 5,000 jobs after a very sharp rise of 61,000 last month. We expect the unemployment rate to tick up to 6% as participation holds steady. So for the week ahead, we see support for the Australian dollar around 72.50, while on the top side, we shouldn't see the Aussie trade too much above 74.50. We'll speak to you next week.